there are strategies where it's all about expiration. So it's really, if you're going to run something like a business, this is the way to do it. But you got to be very calculated. You got to follow every rule, and you got to make sure that you get paid properly. So to do that, you got to find the right premiums. You got to find the right stocks. There's a lot of things involved. So today I want to go over kind of what the strategy is. There is, I did print out this thing here. You see, I see it? It's words. It's a lot of words. But these words are basically the whole thing I have it written down. It's in the course of what I do for the spread strategy and how I executed it. And I literally did this every single week, and I did it every Friday. Friday is like the big day to do this. And the reason is the way premiums pay out. That's kind of what it is. So first, I kind of want to go over the basic concept of what's going on. So basically, what we're used to is very simple. If you buy a stock, right, or option, whichever it is, if it goes up, you make money, right? If it goes down, you don't make money. Now, we've also learned that you could make money going down, and you could make money going down, but you won't make money if it goes up. We understood all that. We've also understood the paycheck collector, which means if you hold it for a certain amount of time, if the stock, let's just say, goes up, you're as long as it doesn't get to a certain point, you make money. If it goes down, you make money earlier, things like that. So these are two different ways we make money. One strategy focuses on volatility, moving to a certain direction. One focuses on less volatility, more a kind of a secure way of doing it. Either way, all of them work very well. I'm a big fan of this one. But what a lot of people want to do is, how do I really collect a paycheck, a consistent paycheck every week? Especially when you have a job, you want to know how much money's coming in. So that's where the paycheck collector could be maybe a little off for you. So and I didn't use this paycheck collector in the very beginning because I never really knew about it, like the way I kind of researched it. What I used was a weekly strategy. So what a weekly is a little different. A weekly basically says you have 7 days, okay? The idea is you're going to hold the stock for 7 days. No ifs, ands, or buts about it unless something crazy happens. So during this time, you're going to collect a premium, right? So let's just say you sell this spread and you collect $500. All this has to do is expire. We're not looking for magical moves. We're not looking for this to go up or down. We want it to kind of stay in a certain area, so it 100% expires and you collect the money. Why this is good is because when you sit down and start trading, you have consistency. If you want to make $1,000 a week, as long as you have that money behind it, as long as you have a certain amount of money, you're good to go. Okay. Let me just see if somebody's admitting here. I see people coming in. Sorry, guys, if I stop, I just have to let people into the Zoom. So the goal is to pick the right stock for it to expire and collect the profits. Simple as that. To do that, there's a lot of things that we have to put in play to make sure that you make the right decision. So what are the benefits? Well, let's say we have the paycheck collector here, right? Paycheck collector. And we have the weekly collector. Why do I use the paycheck collector? A couple things here. So the winning percentage of a paycheck collector is about, we'll say about 93% win rate. A lot of people really very rarely lose. However, with the weekly, I would say it's about 90%. That's, if I looked at back, for the most part, people who use it, it's about 90%, which is great. And you collect money every week. So why the paycheck collector? If the percentages are very similar, why so? Well, I like the paycheck collector for a few reasons, but I also like the weekly, depending on the strategy, depending on the opportunity as well. If you start losing and it doesn't go in your direction, you over here, you could lose some money, right? You could definitely lose some money. you might lose almost probably, 30% of your money. If now it's a small percentage of the chance it's happening, but you could lose 30, sometimes 50. And or if you really let it go, maybe even 80%, but you really have to let it go. Whereas with the weekly, the big thing with the weekly is if it goes in the wrong direction, you could lose almost all of your money that you invested. So that's where you got to be careful to make sure that you watch it every day and that you don't just let it go if it goes in the wrong direction. You want to get out of it at a certain time. So that's the big one. The rules if you follow the rules, it's very, very, very important that you follow them precisely because they're there for a reason to protect you. That's why we want to do it. So I know a lot of people on the market play these type of weekly strategies. You just got to make sure you're doing it right. Okay, so we're going to go over every step today for this. So when we talk about weeklies, one of the first steps you really want to understand is type of stock. Okay, this is so important. So when we're talking about type of stocks, is we want to make sure that you're not trading stocks that are too volatile, that are crazy, and that are not liquid. That not liquid thing is so important, man. So important, because if it goes not in your direction, you're going to have a very small chance of getting out of that stock, and then you're screwed. So the stocks I like to pick are there for a reason. So you want to make sure the stocks are liquid. Okay. And if you have my training here, you would see I pulled this up actually. I gave you guys a list. These are the ones when I was trading specifically, these are the ones I picked that I had a lot of success with. So I shared it with you guys. If you notice, there's not too many small companies. These were the ones I was trading. You want to look to really know what kind of stocks are good. Look at the volume, look how they're trading. Things like that are very, very important. You want to see some consistent patterns to it. And a lot of times what I would do, man, I literally would trade. I remember Amazon for a while, just Amazon, because it would pay out. Then I would do Netflix. And what happens is you kind of learn the pattern of a one stock, two stocks max. And you really start kind of getting into the groove. I know QQQ I was trading a lot. It all depends also on how much money you get paid out. On a weekly, it's a little tougher to get that premium like it would be on something else. So that's a big factor. So picking the right stock, okay? Then what happens is you want to kind of look at, we're going to go through this kind of list here. Determine if you're bullish or bearish. So if the stock is bullish, then you want to set up a bull put spread, right? So I have an example here, right? I think I used this one. I think is SPY, but I don't remember what this is actually. What is this? I don't know. But whatever stock this is, you want to kind of look at it and say, what are the distances away? Now you want to be more precise than you are with the Paycheck collector here. This is so important, and we need to know what the rules are. So first, we're going to know which way is the stock moving. You want to look at the entry of the candle, and you want to look at the momentum indicators. Now, we always talk about momentum indicators are lagging indicators. That is 100% true. If you're doing a swing strategy and you're going based on that, you got a problem there. You got a problem because they're lagging. Does Al have a question?
Okay. No, I'm just talking at work. Sorry, buddy.
Oh, okay. I thought I saw one of these. I was like, all right, I'll stop. My apologies. Keep talking. All right. So yeah, when it comes to weekly strategies, full stochastics and MACD are important because it's going to let you know which way the momentum is going. Okay. So we want to look at some of these stocks, and we're going to start looking at it right now. And I'll give you the exact scenarios. So one, like I said, we want to put that in there. Two is how do we position the trade? So let's just say we go into stock charts. So we could look at any of this list, and again, you might have other stock that you feel is good, whatever it is. So we'll just go with, I guess, Google. Okay. So if I look at Google, right, we could kind of see what's going on here. We're obviously seeing that the stock is very bullish, right? Now, obviously, we want to make our assessment here, but the big thing is we want to look at on a weekly basis. Now, here's what I'm going to tell you guys. You're not going to find the right stocks today because they're not going to pay out the right way. And at the end of the day, here's what matters. You want to be able to keep the stock as the least amount of time as possible because time is not in your favor. You want less time, whereas before you want more time, you want less time. So I've done my research here. There's a specific time, 3:30 Friday. That's it. Because you get 2 days of the weekend that we're not trading, so those are free days, but you're collecting premium. So Friday, 3:30, you start looking and you start making decisions there. Okay. So we want to look for stocks. And right now, again, depending on the market. So for example, if we were right here at some point, maybe this would be different. Right now, the market's kind of moving. But again, we could also decide where the stock is and see if it makes sense. So in this case, we're seeing that the stock is pretty bullish right now. So I would say it's probably more of a bearish situation for next week. But at the end of the day, I'm looking at something like this. I'm seeing, hey, you know what? I think the stock is going to go down. It looks to me because even though this is pointing up, remember, this is very stretched. So the chances are, looking at the RSI here, there's a good chance I'm going to go to Leo on this one. Leo, is there a good chance that this thing's going to be going down? What do you think? He's going to be like, no, it's got to fill this gap.
No, I agree. The gap's been, well, not fully filled, but almost.
So if you understand that, now the next thing you want to really put on here are the Bollinger Bands. So Bollinger Bands are extremely important because it kind of 90% of the time stocks trade within the Bollinger Bands. I'm going to give you very simple rules, guys. Very, very simple. You take this chart. Okay, this is very clear here. Put it on 3 months. Okay, 3-month chart. All right, 3 months, perfect. So this kind of tells us where the stock is and where we could start playing. In this scenario, it shows me that in the last 3 months, this was the highest point. The Bollinger Band is right here. So this is a spot there. Now here, this is too low for us. This is too low. So I would say, okay, maybe we could do something right above the Bollinger Band. Ideally, I would like to get at 116 because what this shows me is in the last 3 months, it's all the way here. The chances of it going to that high is almost, it's unheard of to do that. It's unheard of. So now the catch is obviously that's easy to do is how much you get paid. That's the key. How much will this pay you out? And if you guys have any questions as I'm going through this, please ask. So in this scenario, I would say minimum we could get into, minimum is 108 here. It's one above the Bollinger Bands. Now, Bollinger Bands are very important because it's what they're showing. For example, if you see here, I like that this right here is straight. Straight means it's not as volatile. The minute you start seeing them spread out like that, well, it's heading in the wrong direction. So again, look over here. Look at the history. You could see when it starts flattening out, there's a good chance it might hit here, but it's going to come right back down. They're always 90% of the chances trading there. You could see here, it kind of hit here. These are the things you got to be careful with, like this. So you got to make sure you do your analysis properly. Based on what we're seeing here, there's a good chance this is probably going to calm down for a little bit and then maybe start reversing. But by that time, we should be in good shape. So in this scenario here, I'm looking at it. I'm saying, you know what? 108 sounds pretty decent to me. I want to stop here. And anybody have any questions so far? Oh, I can't see Facebook, I guess. Let me see. Some people are in there, right?
Yeah,
what's up,
there's
April?
nothing on Facebook that I'm seeing.
Yeah, Kelly. It's stocks that are moving in the channel. Okay, yeah, that's it. So yeah, you're right. Stocks that are in a channel, that would be the best ones. Sometimes, guys, just understand, the idea is to be able to trade as often as possible, as consistent as possible. If the market is going to one direction real fast, you have two choices. Yeah, you could do a spread on the other side, or just do a normal trade. Those are very profitable. So you want to use the bounce profit for that. However, if there are nothing to find and they're just stocks are just not moving, this is the best strategy. So you want to try to do these as much as you can, if that's what you want to do a weekly. But now we have an idea. 108 looks like that zone to me. Anything in this zone, I like. This is, like I said, this is too low. What happens is by the time you get to the Bollinger Band, it's not going to pay out. So that's a good example there. I'm just going to use Amazon as a second one here. Again, Amazon kind of looks to me you see how here it's kind of flat, right? 3-month chart. A little tough to make a decision because it is kind of coming into a consolidation a little bit. But I would say based on here, it looks like to me it's probably going in the up direction, but there's too many inconsistencies. This is flat, this is up, this is so probably not a stock I would look at. So you want to look at all of them, like T-Mobile is one I used to play. This looks to me like it might be turning around. But again, look at the Bollinger Bands. It's so in the middle, no good. No good. I even like to take off the moving day averages for now, just because it's confusing. So let me see here. There we go. A little bit better like that. There you go. So so to me right now, when I'm looking at this, let me just put a little bit more solid so people see it better. There you go. Yeah, look at these Bollinger Bands. They're all over the place. So right away, don't play it. It's that simple. Don't touch it if you don't need to. You could look at something like a which one I really liked a lot. I don't know how it is now, but CMG. I haven't played this in a while. Again, this is not bad. This is, so you see here, it's kind of already went up. It's stretched out. Oh, I think Leo would agree with me on that. This is a little stretched out. This looks like it might be coming to the downside. Am I right, Leo?
Oh yeah. Hey Vlad, do you think we can look at Caterpillar?
Come on, bro. Always ruining the show here. Yeah, we'll look at it next. Actually, that's funny. I don't think this is on the list, but that is one of the ones I used to play. Caterpillar is pretty big for this strategy. 1,600. So this looks good to me right here. This looks kind of like a good play, around here. 90% of the time, guys, look, it never hits. So pay attention to that. Caterpillar's cat, right?
Yeah.
Okay, so this one here, darn it. Hold on, let me put it in this part here so it keeps everything the same. Now, this one, it's hard to see on this side, but yeah, this looks good. So what you're seeing here is it's coming down now. Yep. And I don't have any moving day averages. Not a bad one right here because it doesn't really move a lot unless this was a gap here, but overall, a lot of it's basically an exhaustion situation. Look at that. Everything's looking, that's a good one. Leave it to Leo. That's going to be my new line. Leave it to Leo. I would probably want to zoom out just to look at that. 1 second here. Let's do 7 months just to see that Bollinger Band. Yeah, the Bollinger Band is far, so it's hard to see. It's hard to see. Let me go really far out here. Yeah, you guys could see. So to me, when you see that, the other thing I would look at it, again, this is already pretty far. So this is way out there. So we don't have to, we could say, yes, this is here for the long term. But in the short term, you could probably play a little bit further out. Again, it's hard to say because it's not Friday. But I would say if this is looking like it's coming down, why not play something of the top? But you want to be safe. You want to be safe on this. But yeah, very good play right here. I like that. So let's just say we do want to play Caterpillar. Okay. So when we're looking at here, it looks to me like 250, 260 would be a great play. Fair enough? Yep. And again, the premium. So we're going to look at Thinkorswim. I want to caution you guys, the premiums are not going to be real just because it's not Friday. I'm going to tell you, you want to make sure you don't play it Thursday, you don't play it Wednesday, but Tuesday, you don't play it Tuesday. It's Friday. I just said Friday. Friday, okay? Friday's extremely important. That's when you're going to get your best premium with the least amount of days. And don't do it in the morning. Friday at the very last minute, if you could do 3:55 p.m., great. 3:58, 3:59, even better. Whatever it is, just as the latest, the better. So you could get the most for your buck. Okay. So those are little things that sound simple, and the reason I tell you that is because I never listened to that, and that's when I made some mistakes. It sucks, but it's like you learn the mistakes once you lose. It's like, oh, okay, that's why you told me. So fair warning, make sure you do that.
All right, I really hope you enjoyed that part of the course. Now, obviously, it's not the whole strategy when we go into exactly how we do it live and how we put the trades in and things like that. But it gives you a good understanding of how it is to be in a group session or even a one-on-one session. So that's really what I do, is to help people get ultimate clarity instead of watching YouTube videos or try and have somebody else trade. We give you the skill that you could do whatever it is you want on the market, make a certain amount of profit. And again, that strategy right there wins over 90% for all my clients. So if you're interested in really getting more clarity or trying to see if you could work with us, I would strongly recommend book a call with us below and see if you are fit to work with us. Because at the end of the day, it's all about making consistent gains so you could have the option to either leave your job, spend more time with your family, or hey, take a vacation or two. See you there.